Welcome back to the Everything Property Podcast. Today's guest has recently been crowned the #1 commercial broker in Australia, settling over $1 billion in loans in a calendar year. And for those playing along at home, that's 1,000,000,000 in loans. But it wasn't always sunshine and rainbows. And if we wind back the clock a few years, it was all about gap years and Uber driving. Here to tell us his incredible story of resilience, sneakers, and commercial lending, Billy Moskovich. Welcome to the podcast.
Thank you. What a warm introduction.
Yeah, man. I try to do my best. Look,
Gave me tingles.
Yeah. Well, Emil last week said the other week said he had goosebumps, and a couple of people said it's a pretty good intro. But I thought I might as well start on a good note, and then it sort of goes downhill from here. But tell me, you've got a really interesting story, and to be in your 30s and be at the top of the commercial broking game, it's great to see. It's awesome to see sort of someone young like yourself getting through and killing it. No doubt you've upset a lot of people, old people that have been, in the industry for a very long time. But man, how does this all come about from an Uber drive?
To be honest, it was a real sliding doors moment. Grew up in Sydney's eastern suburbs. I'm a Bondi boy, born and raised. Always suspended, expelled.
Why?
Had diagnosed ADHD for a long time.
So you couldn't sit still.
Couldn't sit still. Wasn't never a bad kid, but just always in trouble. Always liked to push the limits. And essentially, the story was expelled from one high school, went to another high school, suspended twice or 3 times the last year. Just scraped by. Went to uni, an undergrad in finance and economics. Took me like 5 years to do a 3-year uni degree. Really just didn't want to be there. After that period, I'm like, you know what, I'm going to go away on a gap year, figure out what I want to do in life, a bit of a soul-searching, solo backpacking trip.
Yeah, everyone does.
From Central to South America. And I remember it was coming to the end of that trip, I was having fun, and I'm like sitting to myself, like, what am I going to do with my career? Had no career ambitions, had no idea what I wanted to do. I remember at that point I was sitting in a hostel room in Colombia thinking about it. I'm going, what would I be happy with? I'd be happy with a desk job making 70, 80K for the rest of my life. And before I left on that trip, I was an Uber driver. So I was Uber driving just to save up some coin for the trip. Came back from the trip, started Uber driving again. And on my 3rd day of being an Uber driver, I picked up Michael Hynes, the founder and executive director of Stanford Capital. And one thing led to another, and that Uber trip changed my life.
What happened? What was the conversation? How you got your foot in the door? And
picked him up in Paddington, and I remember back in that day in Uber, you didn't know which way you were going. You could pick up someone in Paddington, they could go to Penrith, and it was the last sort of trip for the day. I picked him up in Paddington. I remember clicking accept the trip, meaning he got in the car, and it went to Bondi. And I remember thinking to myself, great, I'm gonna drop him home, go home, relax, have a nap or whatever. So still recovering from the jet lag from the trip. Started chatting in the car. I was sitting there driving. I remember this moment so clearly. I was going over Stanford Drive, slumped down in my car, like just so over it, keen to just drop him home and go home and forget about it. And he goes, so what do you do for work? And I go, I just finished uni. He goes, what did you study? I studied economics and finance. Still sitting there like that. And I go, what do you do? And he goes, oh, I own my own finance firm in the city. And it was like a dog, when you wave a treat in front of a dog, the tail starts wagging, like the schmacko ads. Straight away I perked up. I remember like instant change in stature, in just my total attitude. And I started turning on, I started talking a bit of shit to him, building the relationship. And the conversation went to, he said to me, it's always so hard to get an Uber in the morning to the airport. I said, where are you going? He goes, I'm going to Melbourne tomorrow at 6 a.m. And I'm like, I'll be there. He goes, you'll be there? I'm like, I'll be there. He gave me his business card. I dropped him off, and I remember dropping him in the home in the Uber and going, this could be my chance. I remember lying in bed, lying in bed, staring at his business card, obviously Googled up, searched the Stanford Capital website to understand exactly what it is that he did. And I remember sitting there going, holy shit, this could be my moment. Next morning, came, picked him up, 6 a.m, was there on the dot. Didn't speak about work, didn't speak about anything, just spoke about general life, growing up in Bondi, a bit of friendly banter. And he offered me to come spend a few days with him in the office. So this was 9 years ago. In November. So November 9 years ago would be our 9-year anniversary.
Wow.
He offered to come spend a few days with me in the office. And I remember getting to the office. The company was still in its early stages. I think it was We've been around for 14 years, so it was probably fifth year.
Yep.
I was the seventh employee. Now we have over 50 nationwide. It was the silly season. It was a young company, so it was doing a lot of entertaining back in the day. He took me to a few meetings, ran around, did a bit of analyst work here and there. But it got closer. It was the period from November to December.
Yeah. So
it was a super busy period. They were out entertaining.
Yeah, Christmas time.
All of that jazz, and ran out of work to do. And they ordered 300 branded beach umbrellas. So it was 300 Stanford Capital beach umbrellas. And they go, you know what, just here's 300 addresses, go drop them off around the city. And I remember five around one shoulder, 5 around the other shoulder, walking around the city going, this is hectic. You know what I mean? I'm getting paid $25 an hour. I'm getting 25,000 steps in a day, walking around. And I was like pumping ciggies at that stage going, this is awesome. And they thought it was such a shit job. But I was so stoked about it because I'm like, I never thought that they'd actually want to keep me on. Yeah. I was walking around the city going, great, I'm going to pretend I did like a 3-month internship on my resume. You know what I mean? Because that's your thinking when you're at uni. When you're at uni, when you're finishing uni, your key goal is to getting your foot in the door and getting an opportunity somewhere. From then you sort of progress. And then it got to the day before Christmas holidays. I think Christmas Day that year was on the Sunday. It was the Friday. And I had no expectation of them wanting to keep me. I remember just asking, what are your guys' plans? They hadn't even spoke about it. He goes, fuck, I didn't even realise. Spoke to the business partner, Don Lasoda, and they go, we really like your attitude. Well, you can start Feb 1st it was like a hybrid role. It was like analyst, a bit of, administration. Mm-hmm. And I'm like, wow. So that was...
So you got all of January to,
All of January to relax and, spend some time at the beach. And then started Feb 1st, what year is 2025 now? It would have been like 2016.
Yeah. Or
thereabouts. Admin role analyst, quickly realized that wasn't for me. I'm like, they moved me to analyst. I'm like, nah, still not for me.
Why?
I'm a people person, right? I think my real attributes and key traits are building relationships, speaking to people. Analyst work just wasn't for me.
Sitting down at the desk.
Analyzing it. Like, that wasn't what my key strengths were. And he got me on the phone. And the rest is history.
Yeah, well, like the rest is history, but I'm still keen to unpack it because there's 9 years there of starting and absolutely no one knows who you are, what you do, or anything like that. And you've talking offline, I'm across sort of some of the work you do, some of the projects that you're helping out on. I see it on the socials too. There's some massive deals there. So obviously you've been able to establish yourself in quite a competitive market, eastern suburbs too, very high end, dealing with very wealthy clients. But in those initial days, like, who you're learning from, like, you're hitting the phones, like, what are you learning and picking up there?
The early years, I remember back to the day, because even now, it's reflecting back on it. Like when the recent Advisor Awards came out, reflecting back on those days, I remember my first phone call, calling on a $2 million loan, absolutely shitting myself, like shaking, no idea, no script. And Michael Hynes is my mentor. Like he taught me a lot, but the sales side I sort of had to pick up myself, and just kind of learn as you go. I mean, it's quite funny now because obviously those numbers that I'm doing now, I never thought were achievable. But prior to the Stanford, I was working at a call center. I was always the last salesperson in the call center. All my other friends who are in sales jobs now, they were always smashing me, performing much better. Yep. So I had no sales confidence, no sales experience, and just kind of grew from there.
It's interesting because, like, is there a deal or is there a moment through this that, like, is another sort of sliding doors, or is it like working with a developer or a big investor or someone there, like, one deal that gets that over the line that lets you then, that gets you 4 others, or like that puts you on the map?
Absolutely. So a lot of my business, funnily enough, particularly with a lot of the clients in the eastern suburbs, I've got from running on the Sound. Like, my dad's quite famous and well known in the eastern suburbs, so everyone kind of knows who he is. He's got these loose relationships. Yeah. There's a few different groups of developers that over the years that I've been running on the Sound. And the one sliding doors moment really that changed my perspective and changed my mindset on how I operate and how I transact. I'd previously done 1 or 2 deals, 2 mil, 3 mil for small clients. I was running with a family friend who's a very well-known high net worth developer and property investor in Australia, in Sydney's eastern suburbs. And he's classified as a family friend for a long time, right? And it's quite interesting. The night before, I saw one of my mates who works at Ray White, he posted on his Instagram story about selling a block of apartments in Edgecliff for, I think at the time, about $30 million. And at that time, that was crazy prices for that block. Everyone was insinuating he overpaid. And I'm running with this guy the next day. The auction was on Thursday. I'm running with this guy on Friday. And I'm just chit-chatting to him. Didn't even think that I had the opportunity or the ability to get on his caliber and have the opportunity to do work for him. And I'm like laughing. I go, did you say someone bought this block of apartments for 30 mil, whatever it is, at Edgecliff? And he starts laughing. He goes, Billy, you silly fuck, I bought that block of apartments. No. And I'm like, oh my God. I'm like, true. I'm like, this is my moment. We were doing 4 laps. Yeah. You start at the North Bondi Surf Club. You go to the south, back. That's 1, 2, 3, 4. I literally said that at the 3rd kilometre. Yeah. And I'm like, I've got 1 kilometre to try and turn this around. And I'm like, I remember like, for me, it was like unheard of. Like to go from 2 mil to have the opportunity to bank this guy. Never thought it was possible. So I'm like, how do I turn it around? I go, then would love to have a crack at it. He goes, do you think you can be competitive? I go, I think I can. He goes, mate, if you want it, move quick because I'm speaking to my house bank. And I'm like, all right. Picked up the phone to preferred banking channels. Yeah. And they go, how do you know this guy? How do you have the relationship? And the bank swung and I won the deal.
Wow.
So I went from doing 1 mil, 2 mil to sort of unknown, pretty standard style clients to a guy who's a billionaire now and doing a $30 million deal for him. And that's really what clicked my mindset because once you jump from the 2 mil, 1 mil, guys worth $5 million, $10 million perhaps to a billionaire, in your mind, my mindset instantly clicked and I go, if I can transact with this guy, I can add value to this guy's business, I can do anyone in market.
It's just that moment, right? And then did that open other doors for you, right, as in terms of like a network and marketing kind of?
Yeah, absolutely. Well, after that, he's probably one of the toughest and hardest negotiators in the country. Once you do a deal with someone of that caliber, you very quickly start to realize, well, fuck, if I can transact with this guy, add value, that I can approach anyone in market. And that was really the catalyst and the starting point that really started me on this journey.
What year in is this?
First year, call it back end of first year, I'd say.
Back end of your first year?
Yep.
Wow. And then has that been your approach since, or what have you sort of learned, or what's your skill set now? Or
look, the approach, and I say this to a lot of my colleagues in the business, particularly some of the junior guys. Our job as a leading commercial mortgage broking firm, you act as a client's trusted advisor. Essentially, all we do is we save people money for free. If you truly believe that what you're doing is just you're going in there, you're providing a better outcome, a cheaper rate, and the all-in rate and cost of the facility you're proposing is cheaper than what they're currently paying, you're literally saving them money for free. I've had an example on a $100 million portfolio. If you refinance $100 million, you save 0.5 off the interest rate. That's hundreds of thousands of dollars the client's saving on an annual basis based on rate. So if you can go there, if you truly believe that and you can demonstrate that you're able to transact at that level and deliver on what you're saying, it's very hard for people to say no to you when you call someone up, knock on the door and go, hey, you've got $100 million at the bank, you're currently paying X amount a year, I can reduce that by 5-10%. You're literally saving money for free.
What are some other standout deals that you've done over the years that have been like that?
There's probably a few examples to talk to. One of the most recent ones, because 75-80% of developers in market, it's all about working with them to maximize their equity across as many deals as possible.
Yeah.
Because developments, as I'm sure you're aware, it's quite a lumpy business. You put your money in up front, it could be 2, 3, 4, 5 years, even sometimes until you see the return on the back end. So it's really working with the clients and valuers and lenders to minimize equity going into the transactions. On the topic of minimizing equity, one of my clients exchanged on a leasehold property in Bankstown in March last year for circa $21 million. Mm-hmm. Settlement was a 9-month settlement. Settlement was November last year, maybe not March, maybe it was January or February. Bought it for 21 mil, hadn't lodged the DA yet. There was a lot of activity in that market since. We approached a few different valuers to see who'd be the most bullish on valuations. Yep. And we approached it from a highest and best use val, because obviously you got as is, you got the DA approved valuation. But what a lot of people don't know is that you can get a valuation on as is highest and best use, which is approximately a 15 to 20% discount from the DA approved value.
Wow.
So he bought
That's if the DA is on highest and best use, which is, yeah.
So the client bought it for 21, had a DA, settlement was in November last year, had a DA in council, got it valued at 41 mil with no DA approval.
Wow.
We lent them 65, we got a lender 65% on the 41 mil at circa 9% rate.
Yep.
So the facility limit was 120% of purchase price. We covered the entire purchase price, the stamp duty, the deposit got refunded, and they got a cash out.
So they pay any money down for that deal?
No.
No money.
No money.
What's the project? Is it commercial or
It's an industrial. It's going to be an industrial warehouses. So I'm sure you can imagine that some very happy clients when they go into a $21 million purchase. At the time they exchanged on the side, they were budgeting, 35%, 30% deposit plus stamp duty. That's probably $5 million.
Yeah,
and I go, guys, don't worry about that. Let me just find you 120% of purchase price.
That's cooked.
With one of the leading non-bank lenders in the market.
Yeah, I don't know if people realise the value of that and have that 7-8 mil that they would have paid to put it somewhere else. Like that is absolutely huge value. What else sticks out in terms of deals over the 9 years?
It's only sort of now. Obviously, over the years, there's always been great transactions, but it's really now I'm getting to a point where the deals are getting larger, the clients are getting bigger, and they're getting a bit more exciting.
Yeah.
Recently, a few of my clients now, I sort of act in like the trusted advisor capacity, exclusive. So they get me to manage their existing lender relationships. There's one deal, it's a very large, well-known sort of retail commercial investment asset in Sydney's eastern suburbs. Ran a process in market to renegotiate the deal. They initially set the deal with one of the majors at quite an expensive rate. We're talking about a circa $100 million facility. Ran the market, essentially renegotiated with our existing lender. When they initially set the deal, I wasn't part of that deal with the existing bank. I re-tendered the existing deal, created the competitive tension around that bank, dropped the rate by 0.5% and got them a substantial equity release. So I think the initial facility was circa 90. I got them a 10% equity release at a significantly reduced rate.
Yeah, and you're paying what, like 8 or 9% or something on that, or plus a year, and if you've shaved 0.5% off there.
Yeah, not with the banks. The banks are, sharp bank. Typically, the bank structure BBSY plus a margin. That margin was sub 2. I got it close to 1.5.
Wow, that's huge. Talk to me, and I touched on a little bit on the intro, but I'm interested to hear resi broking game, probably a different story and different game altogether. But in commercial, because you are, you're young, you've come up through the ranks over the past couple of years. Have you found any much pushback from the industry or the heavyweights or the people that have been around for a long time or anything like that?
Look, not pushback, but there's always murmurs in market. I think in Australia, we have a serious tall poppy syndrome. Whenever anyone sees anyone rising above the others, the initial instinct is to try and cut them down. But that's with anyone, right? I think that's a lot of the guests on your podcast would have historically experienced the same thing. I'm sure you've experienced the same thing. You just got to null out the bullshit, to be honest. All the haters, all the people who are going to talk shit, say, what they want to say about you. The key thing for me is I go to bed every night knowing that reputation is key. You are nothing without your reputation. As you've seen with the Australian cricket team a few years ago, and that sandpaper saga takes many, many years to build. Yeah. And one incident, one fuck up to lose it all, right? Reputation's everything, and you just have to make sure you go to bed every night knowing you're doing the absolute best thing by your clients.
What's the best way to build up that rep, or that you've done?
You're acting for your clients, right? If you always build up the reputation, do the right thing, be a good person. I've got a strict policy. I've got a no dickhead policy. I'm not going to deal with you if you're a dickhead. Reputation. Do what you say you're going to do.
Yep.
Put your client's interests first. It's not about your fee. It's not about what you can get out of the deal. It's advising your clients what the best possible outcome is. There's been many scenarios where I could have put 2 options, 3 options in front of my clients. The option for them, the preferred option for them, the one that saves them the most interest and saves them the most costs, often isn't the one that I make the most money on. But I'm not focused on where I make the most money. I'm focused on where I add the most value to the clients. Because if that's your first and prime thing that you think of, they always think of you. You're the first person that they think of when they have a new site, when they've got a new project. And particularly for the commercial game, some of these big developers that I'm lucky enough to call my good clients and friends now, they have 5-6 projects on the go. You know, it's not just one client. Like some of my clients were doing a few $100 million worth a year, and that's because I put them first. I put their needs first. You know, I don't think about what fees I'm going to make out of it. I go, how do I add the most value to this person's business?
And I suppose it's just a grow word of mouth from there, right? Because I know a lot of mortgage brokers, and like I feel like you can spot that pretty quickly though with what they're offering you and rates and banks and stuff, where it's like, yeah, you talk to enough of them and then you start to realize and get a good hold of, like, you know, who's talking a bit of fluff and who's just wasting your time and who are the good.
So separating who's the real deal and who's not.
Talk to me about the commercial lending landscape. A little bit different to resi. We had a rate cut a few weeks ago, the first one of this year. What are your thoughts on that? Impacts on commercial market?
Yeah, so the commercial market, it's been quite, and when I say commercial, I specifically mean, because people often get confused. You've got residential mortgage broking, which specifically relates to mum and dad style home loans.
Mm-hmm.
Then you've got commercial. Commercial relates to like the asset classes, residential, industrial, retail, and obviously commercial assets.
Mm-hmm.
But it's been quite a tough year over the past 4 years for developers and property investors, mainly due, you know, you had COVID, you had the cash rate go to 0.1, build costs shot up 30%, sharp rise in interest rates, all the Class 2 regulations, all the delays in CC, delays in OC. Everything is costing a lot more to build. Everything's taking a lot more time to get approvals in place. And combine that in a high interest rate environment, it's been a tough few years for property developers and investors. So this rate cut is very welcomed in market, in my opinion. It's going to have a huge impact on consumer sentiment, and I think it's going to drive a lot of activity.
As well as the commercial space, as well as resi, right?
Yeah, absolutely. Because I guess what are the main impacts do I think the rate cut's going to have to the sort of commercial market? Increased consumer sentiment, right? At the end of the day, developers can only build. People need to buy it. There needs to be demand for that stock. Servicing a home loan, it's not easy. You know, even $1 million home loan, that's 8 to 10K a month, depending on who the lender is, right? A lot of families, to prove that servicing, it's not easy. So firstly, that is going to drive demand because currently the demand for properties far outweighs the supply. Given all the Class 2 regulations, partly the planning reforms we were chatting to before, that's what they're trying to fix, is to bring more supply into the market. But particularly out west, the lower to mid price point units and stock, the feasibilities just haven't been stacking over the past few years. 4 or 5 years ago in Penrith, you know, you can build 2-bedroom units for about $250K a unit. Now that's $350K, $400. But the GRs 4 years ago, they were $650K. They're still the same.
Yeah.
Right. So I think the rate cuts, or the one rate cut, and the general sentiment that the rates have topped out and then they're on their way down, will really drive, firstly, demand and purchases to go to these units. It'll drive the supply of the units too, because a lot of feasibilities will start to look better now. Particularly as construction costs, they've topped out as well. You know, the market's now settling into that post-COVID hangover, post-COVID norm. That's for developments, and then particularly for commercial cap rates. You know, cap rates have gone from...
True.
Cap rates have got... Peak COVID when the cash rate was 0.1. Cap rates were circa 4%, sharp cap rates. They've softened to about 5.5 to 6%. Now imagine, if you had a $100 million building, in Surrey Hills, call it, that you refinanced,
He knows.
on a 4% cap rate, if you got a bank reval, the income would stay the same. You'd even have 3% annuals increases. But if the cap rate moves from 4 to 5.5%, that's a 30% drop in the value.
Not good.
You know, and it's crazy because residential, they don't fluctuate like that as much, right? Imagine having a fully leased building. 4 years ago, you go, awesome, that's worth $100 million. Now you go, fuck, it's worth $70 million. My bank debt's $60 because previously I had a $60 million loan and a $100 million building. Yeah. Now I've got a $60 million loan and a $70 million building. So I think the commercial out of all the sectors has been hit the hardest by the past few years.
Yeah, okay. But look, hopefully if we get a couple more in, there's a bit of momentum. I think it's wild in the resi sector of the market that people are hanging on interest rates so much in terms of the investing. my messaging has been clear, is that like anyone out there that's thinking about in the investing market, in resi investing, is that like just don't wait for the cut, because everyone else will get in.
Just do it. But I also don't get it, because everyone goes, they're waiting for the right time. I go, the right time is now. The right time's yesterday. Just fucking do it. If you look at the price growth in all of Australia's major cities, it's only got trending one way.
Yeah.
It's not like you sit there and go, oh, you know.
Yeah.
Melbourne's probably the only example that the apartment market's probably stagnated. The prices may have come down. But if we're talking Sydney, there's the chances of you buying a property tomorrow and in 5-10 years it's worth less than what you bought it for is slim to none.
Yeah, if it's a freestanding, if it's like sort of freestanding and a decent house, especially in the east, I think you'll do well with all those sorts of pockets. Tell me, what else over the past sort of 8-9 years has been a total game changer for you in terms of being able to grow, scale, sort of like your business and your team?
I typically like to look at sort of career goals and just sort of life goals in general into two categories. You've got health and personal goals, and then you got the business goals. One thing for me that's made the biggest impact is consistency. You set training consistency, sleeping consistency. You set a routine and you stick to it. You know, currently, back in the day, I'd always fluctuate 10, 20 kilos. You know, I wouldn't take my training as seriously as I do now. Now I train, 7 to 10 times a week. Every morning I wake up, go for a run, same routine, go to the office, make the calls. That's one, because you need to feel good. You need to look good. You need to feel good in order to perform your best, right? If you don't invest the time and effort into your health, you don't back yourself enough to be the best version of yourself. How do you expect any other client or anyone to give you that same opportunity, to back you, to give you an opportunity if you don't give yourself an opportunity? In terms of health and fitness. That's
true.
Secondly, team is everything, right? There's no way I'd do anywhere near those numbers without my team, and it's really a team effort. It's growing the team, finding the right people. You know, that's the key. That's the absolute key.
What's your key traits when you're hiring and you're leveling up?
Oh, look, it really, you kind of split it out between sort of brokers under me or salespeople and sort of the analyst support side. But to be honest, in my team, it's kind of blended. I think in my direct team now, I've got two brokers, two brokers under me, and one sort of lead senior analyst. And we're looking to expand now. But the key thing, attention to detail. That's the key thing, right?
Yep.
Attention to detail. There's a difference between not knowing something and just not paying the detail and not looking at something, double checking your work before you send it through.
Yeah.
That's one.
How do you pick that up in an interview though?
Look, in an interview it's pretty hard, but in an interview, when I interview someone, it's really personal skills, understanding how they interact with me, because my interviews aren't the most normal interviews, right? I'm sort of the last round of interviews before someone gets hired in my team. There's sort of other people in the company that do the initial interviews.
Yeah, okay.
There's a psych test. We typically do 2 tests, 1 IQ test, 1 behavioural test, which tells us a lot of things. But yeah, attention to detail, drive, and the people skills. You know, it's gone to the, when I was at school, everyone goes, you know, it's all the smart investment bankers that I thought would be the most successful, make the most money. But you need intellect, but it's people skills. You need to understand what the client's looking for. You need to build a relationship. Building a relationship is probably the key thing in market, right? I would not be where I'm at today if I wasn't be able to build the relationships with lenders, my team, my clients. You know, it's building long-standing relationships where you both benefit from it, right? Relationships, probably one of the most important sort of foundational, I guess, points that I focus on. Any relationship, in order to foster and build a long-term, long-standing relationship where you can really position yourself as the client's trusted advisor, any relationship is a two-way street, right? A relationship doesn't work if there's only one person benefiting. It has to really be both ways. When I say benefiting, a lot of my clients, when I was talking before about putting their needs first, adding that value, if you can sit there at the end of the process and the client say they're paying you a $200K fee on a $50 million deal, you need to demonstrate to the client that at the end of that process, when the client goes and pays your invoice, you've added more value to them throughout that process than that $200K fee that they paid you. Because if you don't, that's when the client turns around and goes, you know what, thank you, Billy, but I'm gonna either do it myself next time. I'm gonna go direct to the lender, or I'm gonna use another broker. It's really fostering that relationship, and it's not just relationships with the clients. It's relationships with the entire market. In commercial, there's a number of different key stakeholders and key groups that you need to have strong relationships with. You need to be able to lean on them, and you need to be able to ask them for favors when you need favors. Like in my game, you've got the clients. You need to build a relationship with the clients to get the best outcomes. In order to get the best outcomes from market, you need to have deep, long-standing relationships with lenders, valuers, lawyers, QS firms. Those are probably the key 4 parties, and all 4 of those parties, they directly benefit from working with you. Lender, over my 9 years in business, I've developed long relationships, become good mates with key lenders, and I've seen these guys grow through the ranks. We've all grown up together, right, through the ranks. Some of my best mates work at, the senior directors at some of the largest non-banks in the country. So you get to a point after fostering relationships over all these years where you're transacting hundreds of millions of dollars annually, year on year, with some of your best mates. And that's a pretty special feeling. But as mentioned, relationships with the lenders. They give you the best outcome, you give them deals, right? It's a win-win. Valuers. They do your work, they give you good outcomes, you're giving them fees in the door. Lawyers, same thing. You need to get the good relationship with the lawyers in the back end, on the legal side, on the client side. QS firms, right? If people don't like you, people aren't going to want to work with you, and people aren't going to do you favors. When you create an environment around yourself, and again, doing the right thing, always putting your clients' needs first. You think about yourself and your fees last. You create a little ecosystem around you where everyone wants to work with you, everyone wants to do business with you, and that's really how things start to flow.
Yeah, I totally agree, and I feel like it's the same for like property negotiations, or like all that kind of stuff. Everyone wants to talk about a deal, how they rip someone off, and then they do all this. But if you can position it in a way that if you're buying off a vendor or a seller, if you can position it in a way with terms, price, however, that they feel like they've won, you feel like you've won. It benefits everyone. Quick way to get the deal done, rather than someone feel like they're getting the short end of the stick and not wanting to go through with it.
So I think a lot of people, you're exactly right. I think a lot of people in market that they don't have the long sight or the future, being able to look into a crystal ball and being able to see what this relationship may look like down the track if you do the right thing. You put the client first. You don't gouge them with fees. And when you truly care, like I'm truly passionate about what I do. Like for me, work doesn't truly feel like work. Like I'm out there, I'm working with my clients, I'm working with my mates, I'm settling deals, I'm making money, sure, but it's enjoyable, right? I think it's key.
What's next, do you reckon? Do you have are you investing in property? Are you wanting to do some of these sorts of deals yourself?
Yeah, interesting question. I always kind of wanted to go and develop myself on the side, but I just realized very quickly in my position, instead of developing my site, cash flow my clients. I recently exchanged on a little development site in the eastern suburbs for like a week or two ago with one of my friends and clients, just sort of JVing with them, just cash flowing them. They run the process. I run the finance side of it. They run the planning, the approvals, the build, everything like that. So that's quite exciting. Exchanged my first site a week or so ago. And I'm also just agreed terms this week on a tech business called DocuBuild, which aims to automise and systemize the OC, CC, all the construction documentation process.
Yep.
And it's a massive. The reason why I'm so excited about DocuBuild, I've known a guy who was a year below me at school. He started the business, and there's such a demand for it. There's so much red tape in market. There's so much regulation. Everything's taking so much longer, and it's surprising. Like all these developers, they have OC checklists, CC checklists in an Excel file, Dropbox folders, so clunky, so unorganized, right? And that's part of the reason as to what's causing a lot of these delays, particularly with builders falling over. If you've got $100 million job, you need to get certifications all the way through. If all of a sudden a builder falls over, is not keeping track of certificates, you don't have all the certifications in one spot, your OC can be delayed 6 months to a year plus. You can never even get OC in some of the instances we've seen in market recently.
Yeah. Not good for, especially when you're at the end of the project and peak debt, right?
Yeah, exactly. Peak debt, peak debt at, $150 million, when you're paying 10%, you've got $100 million on the line. Any delays, every month is costing you hundreds of thousands of dollars, right?
Yeah, that's a whole lot of money even per day to be able to delay shit. What about, talk to me, it's pretty interesting, there's this rise in private credit, right, whereas almost everyone was using banks once upon a time, but now I feel like the market's a little bit changed. You're probably more across that than me, but what are you seeing?
Private credit space just exploded in recent years. And I guess a little stat to start off the conversation. When I first started at Stanford, we were doing 80% of our volume year on year with the banks. Now it's absolutely flipped on its head. It's about 85% non-bank. And the reason for it, the non-bank space has taken so much market share off the banks. The banks, they're regulated. You need debt cover. The max loan to cost is 75. That usually works out to 65% LVR. LVR is limited. You need pre-sales, holding costs. And a lot of the time, particularly for high-end projects, pre-selling off the plan to get bank funding, you're discounting the units by 10%. I've seen a number of cases where the developer, past few years, decided to sell, locked in his GRs, he locked in his top-line revenue, started construction, went to the bank funding, was paying 7% with the banks. Construction costs shot up 30%. And the purchasers of those units made more money than the actual developer because during that time, the market's run 30%. The developer's gone out of that job with making no money. Imagine spending 2 years building this thing, going through all the bullshit with the builders falling over the bank, the sales, to get to the point not make any money, and you sit there and you go, you sold the penthouse to some guy 3 years ago for $10 million, now worth 15. Like that guy's settling on that guy's settling on his penthouse with no equity in the deal. So back to your point on the rise of private credit, there's so much liquidity. We've never seen more liquidity in the market. And the gap between bank and non-bank, particularly for construction deals, is, in some instances, 1.5% to 2%. But the difference between bank and non-bank is non-bank, there's very little regulations at this point in time. Obviously, APRA is talking about trying to regulate it, but it's going to be quite hard because if you're a high net worth, $100 million, not many people can tell you how you choose to invest your $100 million, who you choose to lend it to, right? That being said, let's wait and see what happens there. But particularly for construction, and back to the point earlier, it's all about minimizing equity and spreading equity across as many deals as possible. I'm doing some deals recently. A deal that I signed, 75% LVR, $50 million deal, no pre-sales.
Break that down for someone that doesn't quite have the development terminology and understanding that you and I do.
Yeah, sure. So for construction funding, which predominantly I'd say 60% of my business or year-on-year flow is for construction funding. So how construction funding works is you land on the end value of the project. Yep. So someone may have a site, might have bought the site for $5 million. They went and got a DA approval for 10 units. You get a valuation on as is and an as of complete basis. By as of complete, the valuer goes, what is the value of these units in today's market on completion? So 10 units might be worth $50 million. Let's make it more factual to this point. The GRs are probably $90 million. 75% on 90 mil is probably around $60 million. $60 million, no pre-sales. Margin of BBSY plus a margin of 2.25 and a line fee of 2.25. Now, to compare that with banks, the banks would be at 65% LVR. They'd require you to pre-sell half of those units. Yeah. By trying to convince someone, imagine, particularly for high-end stock, imagine you're trying to sell an apartment for 70K a square metre. You're trying to convince an ultra-high net worth.
It's cheap in the East, mate.
That's it, hey? To pay you a 10% deposit for something that's not there, not yet built. Given all the issues with builders falling over, all the delays in market, the only way you can convince them to sell them off the plan is by offering up a discount. You need to incentivize the purchaser, convince them that it's a good investment for them, give you the $1.5-2 million deposit now for something that doesn't exist. Yeah. It's not currently there.
I mean, and that's the issue, right? Is that you sell too many of them off the plan, then you don't leave enough skin in the game to have it at the back end when you're finishing.
Well, it's a double-edged sword, right? It's, you can take the risk on the market moving and take the punt on the demand there and then paying the high price on the back end. Mm-hmm. Or it's a similar thing, what I mentioned before, you pre-sell off the plan, there's delays, overruns, costs, and the market moves 30%, and your purchasers make a decent return on the investment.
Absolutely wild. Is there anything else around? Who are the top privates that you're using at the moment for these deals? Because I feel like everyone gets them. There's different tiers of lending in different banks and all that kind of stuff. I feel like people get get it confused between, banks, non-banks, privates, tiers of lending, all that kind of stuff. So who are the main players in this space?
So the bank market encompasses the traditional big four. You got NAB, ANZ, Westpac, CBA. Then you got all the second tiers. You got St. George, ING, Macquarie, BOQ. That's the banking market. And the banking market, I guess, is classified by banks that are lending ADIs, authorized deposit holding institutions. Fact check me on that.
Yeah.
I know the acronym. I don't know the exact.
Yeah, the audience will get you if it's not.
Yeah, and then the non-bank space is private credit, right? It's investors' money looking to make a return on their investment. And it's such a popular space as an alternate investment space because you get a first mortgage, you get a personal guarantee from a high net worth experienced developer, and in some instances you're making 9% plus on your money for a very secured investment. You got first mortgage security, you got a PG from a guy worth a substantial amount. It's obviously everything can go wrong, but compared to investing your money in the stock market where everything can change drastically on a daily basis, property is a lot more secure. And I guess that's why there's been such an influx of liquidity in the market. Like we've never seen so much liquidity. And I guess it's our job. It's like when the property market's hot, right? Everyone wants to downsize. Everyone wants a sexy little, 200 square meter apartment in Bondi. When there's so much demand for the product, it's about creating the competitive tension in market to negotiate the best absolute rates and terms. And what I've seen is rates are going all the way down and LVRs are just creeping up and up. Now when a customer goes, I'm thinking of going to the banks for my construction funding.
Yep.
I go, let me tell you why you won't. The first bank deal, construction deal I'm doing in probably 3 years, probably settles the next week or two.
Wow.
Because it just doesn't make sense. You know what I mean? You'd much rather put in a half the amount of equity to a third and pay a few $100K more in interest costs than go to the banks, be limited, be limited by the amount you can borrow. That equity has to stay in there the whole time of the project. And as well, you're locked into the sales too.
I mean, you pay for it in more places than just that upfront equity.
Yeah, exactly. And sorry to cut you off, but I think the attitude's changing. Like when I first started, everyone was of the mindset bank funding is the most cost-effective form of funding. Like technically it is, right? But that you're not taking into account the opportunity cost of the other deals you could be doing, pre-selling, locking in the prices, discounting them, the market moves. And a lot of these examples, the non-bank space, it just makes a lot more sense. You can go into a deal. I'll give you a prime example. Let's say you have $10 million. Yep. Right?
Good example, yeah.
With $10 million, you can go and do one deal with the banks, put all that money with one bank, put it all in, and do one deal. Right? With the non-bank space, what it allows you to do, you can spread that 10 mil across 3 deals or 2 deals. Right? You'd much rather spend an extra $500K in interest on each of those deals in order to enable you to have two projects on the go.
Yeah, because if profits, if you're talking about similar size profits and you're making, let's just say ROI is 100%, you're making 10 mil. You've either got one deal where you make 10 mil, or you got 2 deals where you're making 10 mil and 20 mil total.
Exactly.
So, yeah, it makes sense. I probably want to preface this with saying that this is more around that commercial and developing building space than it is, because a lot of our audience is obviously property investors with a property portfolio. Probably doesn't make sense for them to be worrying about some of this stuff. But if they're in the construction, lending, commercial space and high net worth, it's probably something to be considering and thinking about. Tell me, another move that I'm seeing at the moment a lot is the rise in commercial brokers. Everyone's sort of coming in and moving away from the banks. What have you seen in that sort of area?
Exactly what you said, just the rise. Everyone wants to be a commercial mortgage broker. It's quite interesting. Like I've seen numerous senior bankers, these guys that have done their whole career at the banks, going from one person spends 30 years plus the CBA. He was probably 3 levels down from the CEO, quit. He's a commercial mortgage broker now. You're seeing a massive. The non-bank space has taken a lot of the good employees from the banks, and a lot of non-bankers and bankers are just going, we have all the clientele. They see how much money they're paying the brokers, and they go, why don't we do it ourselves? So I've seen a massive influx there, and also a massive influx of resi brokers trying to get their foot in the door in the commercial space.
Yeah, I feel like it's like a specialist versus generalist argument, right? Why is that dangerous?
Well, it's a great point. Specialist versus generalist, right? If you want the best outcome, you need someone who specializes in exactly what they're doing. Like, for example, let's say you woke up one morning and you had a random lump on your chest, right? Obviously quite worrying. If you go to a doctor, you know what I mean? He's a skin specialist. He's also an orthopedic surgeon. He's a GP. That's just his day job. He does something else. You can't be the best at what you do. You can't possibly get the best possible outcomes, or at least tell your clients you can, if that's not what you specialize in, right? The resi game and the commercial space, it's two different things. Similar principles and similar foundations based on both of them, but to be a specialist and to truly be the best in market, which is what I aspire to be, and deliver the best possible
Well, you
outcomes.
are, mate. You're number one now, right?
I'm just trying to be humble. You need to be a specialist. Like, I only specialize in commercial loans, right? No mum and dad type home loans. All the mum and dad type home loans, even if it's $7-8 million, I refer it. You know what I mean? I have referral channels, guys that specialize in the home loans. And I say to my clients, I probably could do it, but I wouldn't feel comfortable putting my name to it and say, hand on heart, that's the absolute best outcome in market, because that's not my game. I'm a specialist in commercial, and I'm not a generalist across the two.
And I think that's why that you've found your niche, you've stuck with it, and over the last 8-9 years is why you're number one. But conscious of time, Billy, we usually wrap these podcast episodes up with two different things. One is a piece of advice for the audience to take away, or that you can leave them with. It could be those that are building their career. It could be, anyone that is looking for a construction loan or anything like that. And then after that, we usually do a quote you live your life by. So I'm going to ask you, what's your key takeaway for the audience, or a bit of advice that you wish you had all those years ago?
Key bit of advice is set big, hairy, ambitious goals. Set yourself goals that when you're writing them out on a piece of paper, you almost don't know if it's possible that you can achieve it, I remember when I first said to myself, I'm going to write $1 billion. I said it to my team. Everyone was like, you're not going to do that. It's never been done before, blah, 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 blah.
Has it never been done?
I don't think so.
Wow. Fact checkers get on that, yeah.
Please, I've tried.
Yeah.
I don't think so. Not by an individual team anyway, like obviously brokerages. But first year I failed massively. I told everyone I'm going to write $1 billion, blah, blah, blah. Wrote $550 million that financial year. And I said, you know what? I'm going to fucking write it the next financial year. I didn't sit there and give up on it. I didn't say, oh, you know what? I was embarrassed because I said I was going to write it. I didn't. But I owned it. I go, you know what? I shot for the stars. I fell a bit short, but I'm going to keep fucking shooting until I get there. And that was the previous financial year. Like this last financial year, first 1 billion, last financial year 1.2. This year, financial year 1.2 to 1.5. And I guess next is chase down the 2 billion.
So how long to get to that 1 billion goal? Like between when you set it and when you first achieved it?
2 years. The financial
that's it?
No, but I've obviously built it up, in my business, like first year I did like 50 mil, 100 mil, 200 mil. You keep fostering the relationships because once you get one client, you typically do all their work. You get referrals, you keep building it. It grows quite organically. But that'll be my piece of advice: set big, ambitious goals, and manifest those goals. Write them down. Don't just say I'm going to do it. Write it down. Set yourself a target. Set yourself a schedule. How are you going to do it? Yeah. You know what I mean? I didn't just say, I'm going to write $1 billion. How are you going to do it?
How do you break it down?
I like to structure it. As mentioned, I've got health goals. I've got fitness goals. If the 2-year goal, I structure it 3 month, 6 month, 1 year, 2 year, 5 year. Okay. Right? So 5-year goal, I can't remember what it was back in the day, but the 2-year goal, the 1 year goal was $1 billion. One day I woke up, I go, you know what? That's a pretty sexy thing. Like $1 billion Billy, it sounds good.
$1 billion Billy.
You know what I mean?
Just got the title for the app.
It sounds good. I'm like, I'm going to chase it down. I go, let's fucking do something. Let's try and do something that's never been done before, right? Chase it down. So 3 months, how am I going to do it? Simple. Any sales role, you're not going to do it without making calls, marketing. No matter what. Even now, I'm sitting there writing $100 million a month. I've got my set time every week where I sit there and pump 30 calls out. Got my database, got my, my target people that I'm chasing, particularly now, the clients I'm chasing are $500 million plus net worth. So they're harder guys to crack down, but it's persistence and it's visualizing that goal and never letting it leave your sights.
I like it, and I'll actually vouch for that because we had a slight interruption for the podcast, so we had to stop for 5 to 10 minutes, and Billy was on the emails, was on the phone trying to land a particular guest that we both knew. So yeah, respect, and the grind doesn't stop. So tell me as well, once we've got that, I will ask you, Billy Moskovich, what is a quote you live your life by?
Look, I'm not sure if necessarily a quote, but I guess it could be a quote by Billy Moskovich.
Here we go.
Something that I always refer to as set your goals and chase them down and never let them leave your sights. You know, back to the question we spoke about before, like I went to bed getting anxious, freaking out about what happens if I don't write $1 billion in that second year. Because failing once is okay. Failing the second time at something, you know, it starts to get not okay, and it really can bruise your ego. Set your goals and chase them down. Don't let anything get in your way. I
like it. And I like the fact that even after the first year, you didn't go up and go, oh, fuck, I'm going to recorrect this and maybe I decrease it to 750. You went, no. I didn't hit it first year, but second year, I'm not making the same mistake twice. That's it. Mate, I appreciate you coming out and being on the podcast. I'll see you down at Bondi for a runner.
See you soon.
Done, mate. Too easy.